Hello, everyone. Thank you for joining us today. This is Michael Kupfer with Harvard Business Services, and I'm joined by our president, Mike Bell. We're going to be getting started here in just a second and just have a couple quick announcements for you and introductions at the top. And first of all, we'd love to find out where those of you on the line are joining us from. So if you don't mind, just take a second, go into the chat box, and let us know where you are. If that's a city and state in the U.S. or a country outside the U.S., we'd love to know, and we'll take a look at where we're represented on the webinar today. And in the meantime, today's webinar is Understanding Delaware Corporation Franchise Tax. I do want to let you know that we're going to have some time for Q&A at the end, but we do encourage you to ask your questions during the webinar, and as Mike's kind of going through the slides, he'll do his best to work in your questions and answer them as they come up. Anything that we don't get to, we'll try to save to the end. And because today's topic can get a little technical and everybody's got their own specific situation, there might be some questions that we're unable to answer on the air. But if that's the case, we will direct you to our franchise tax department and make sure that you get answers to any questions that you have, especially ahead of Friday's deadline for corporations. In addition to that, we will be recording today's webinar, so you'll have access to that probably tomorrow. And the same goes with the slides. So you'll have access to the slides that we're presenting today in PDF format, and that will also be included in the email that you receive tomorrow. So you should have everything you need as far as that goes. And it's good to see that we have a few different areas represented on here. South Texas, Charlotte, North Carolina. We've got someone from Toronto, Canada, and even somebody from Bosnia and Herzegovina. So, welcome to everyone. I'm glad to see that we've got a great variety of geographies represented here today. And I just want to take a quick second to kind of introduce our company and let you know who we are. We are Harvard Business Services. We were founded in 1981 in Wilmington, Delaware by Rick Bell. This company has been family owned and operated the entire time. Mike Bell, who's going to be presenting to you today, was actually named our president this past January 1st. We are now headquartered in Lewis, Delaware, which is right on the Atlantic coast, a little more than halfway down the state. We have formed over 150,000 companies, and we have over 75,000 current clients worldwide. We are Delaware registered agent information specialists, very customer focused. We offer free lifetime support, low prices, friendly staff. People love interacting with our sales and support team. We have people right here in the office that are answering questions all day, every day, and we try to make sure that everybody gets the answers and the guidance that they need. We should point out that we're not attorneys, and especially for this webinar, we're not accountants. So we are going to do our best to inform you of how Delaware Franchise Tax works, but if you have any specific questions that you need an answer to, don't be afraid to go to your accountant if you need to do that. And lastly, we are not affiliated with Harvard University, so just the name is all we share, nothing else. Okay, so I'm going to turn this over to Mike right now, and he'll take you away on the Delaware Franchise Tax Basics.
Hello, everyone, and thank you for joining us on this webinar. We appreciate your time. The deadline is Friday for corporation franchise tax, so we want to make sure that you guys know all the everything about filing your franchise tax here for Delaware corporations, and so you guys can avoid any late fees from the state of Delaware. So I'm going to go into some basics about the franchise tax for you first, just to give you a little bit of knowledge about it, because we do get a lot of questions about what does franchise actually mean. So it's just the terminology of what Delaware calls their annual tax that you pay here. So it's due every year for every Delaware company to keep the company in good standing with the state of Delaware, regardless of company activity or income. It doesn't pertain to you being a franchise chain restaurant like McDonald's, Burger King, etc. It's imposed by the state of Delaware for the privilege of owning a Delaware company. There are different due dates depending on what type of company you are. So the corporation's franchise tax, your franchise tax is due right around the corner, Friday, March 1st. And if you're an LLC, your franchise tax is not due until June 1st. And we'll do a separate webinar later on in May about LLC Franchise Tax. So this one is specifically geared towards corporations. So the way the state of Delaware works with the franchise tax here in Delaware is it's paid in arrears. So you're paying for the previous calendar year. So if you formed your company in 2018, you're paying the 2018 franchise tax here in 2019. If you form your company here in 2019, you're going to pay your 2019 franchise tax in 2020. So it works in arrears. A lot of people get confused by that, but that's how the state of Delaware does the franchise tax. So a lot of people ask what is associated with paying the franchise tax in the state of Delaware. Is there an annual report that's required to be filed with it? The answer is yes. For a corporation, you're required to file an annual report. The report must include the corporation's physical address. This is where the business is physically located and physically operating. It then must include the name and address of at least one officer in the company, and it must include all the names and addresses of all directors in the company. Annual reports are available to the public. So when you initially file your company here in the state of Delaware, none of the information is available for public record, but for a corporation, once you file the annual report is available for public record. And the annual report filing fee is $50, and we add that into the price, so that's included in the cost to file the franchise tax with the state of Delaware. And I'll go into more of this here in a little bit. A lot of people want to know, is the franchise tax the same as the registered agent fee, or is it part of our formation packages? The answer to both of those questions is no. The registered agent fees are separate from the franchise tax. The franchise tax is paid to the state of Delaware, whereas the registered agent fee is paid to the company acting as your registered agent in the state of Delaware. And the job of the registered agent is to forward along any lawsuits any lawsuits that may be served against the company, and to notify you of the annual franchise tax here in Delaware. We charge the lowest Delaware registered agent fee in the industry at $50 per year. It has remained fixed at $50 per year since we opened the company in 1981. So a lot of the other companies, they'll raise your registered agent fee and charge you an excessive amount, whereas of us, we have a fixed flat rate for year in and year out. Next slide goes into how a Delaware corporation franchise tax is calculated. Delaware corporation franchise tax is based off of the number of authorized shares in the company. The minimum corporation franchise tax is $175, while the maximum is $200,000. Nonprofit corporations are $25 a year. So if you, and I'm going to go into more detail about this, about how they're calculated, but they are calculated in one of two ways with a corporation. It's either calculated by the authorized shares method or the assumed par value method. Most corporations wind up paying between $175 and $400 per year, and then the $50 annual report fee on top of that. So the next slides that we will go into will break this down more further. We'll have some examples for you to show you exactly how it's broken down. So the authorized shares method is based upon the number of authorized shares a corporation has authorized. So it's used as a default calculation by the state of Delaware. So if you are a minimum stock company has 5,000 shares or fewer. and the franchise tax for 5,000 shares or less is $175. If you have 5,001 or 10 to 10,000 authorized shares, your franchise tax is going to be $250 plus that $50 annual report fee. And then for each additional 10,000 additional shares on top of that, you would the fee is $85, and the maximum tax that you pay here in Delaware is $200,000. Most of the time, a maximum stock company is a Fortune 500 company, and they'll pay the maximum franchise tax, whereas your smaller companies, you will mostly pay the limited amount, depending on the information that you provide to us. So I'll go into some more examples to show you how this is broken down. So the first one is the authorized shares method. So we're just going. This is a sample calculation and it's a fictional company. So this company has 5,000 or fewer authorized shares. So this company has 1,500 authorized shares. So because they are under the 5,000 threshold, they would pay $175 for the less than 5,000 authorized shares, plus the $50 annual report fee for a total of $225. The next example that we're going to show is a sample calculation based upon having 5,001 to 10,000 authorized shares. So Joe's Coffee is a Delaware C corporation. They have exactly 10,000 authorized shares. So they would pay $250 for having between 5,001 and 10,000 authorized shares, and they would have the $50 annual report fee for a total of $300. Next calculation is where it gets a little more in depth and gets a little more. The information gets there's a lot more information entailed in it, and I'm going to show you how the authorized how this method, this authorized shares method with 1 million shares of stock can be recalculated using the assumed par value capital method. And again, if this information is feels like it's going over your head or things of that nature, we are going to provide this. This is being recorded, and we are going to provide the webinar for you. And we have a dedicated franchise tax team that is here to help answer any of your questions via phone at 800-345-2677. So this company that you see here has 1 million authorized shares. So they would pay, based upon the number of authorized shares, they're going to pay $250 for having 5,001 to 10,000 authorized shares, $85 for each additional 10,000 authorized shares, plus the $50 annual report fee. And so how it's, and a lot of people, when they get this franchise tax notice and they see $8,715, they call up and they ask us, well, what's this fee for, and how is this, this put together and all that. So this explains to you how it is your franchise tax is calculated. And not to alarm you, this can be recalculated using the assumed par value capital method. And I'm going to go into more detail about that here on our next slide. So the assumed par value capital method, the par value is the monetary value assigned to each share of company stock. It can be any value the directors choose. So what that means is you can sell the shares of stock for whatever the market may bear. You just can't sell it for less than what the actual par value is. So zero par value is permitted, but it precludes the corporation from using the assumed par value capital method. So you have to have at least something over zero par value in order to be able to use this, the assumed par value capital method. And in order for that franchise, in order for that filing method, to use the assumed par value capital method, you have to provide your total gross assets and your total issued shares as reported on Form 1120 Schedule L. And this is usually filed at the end of the year before 12/31. And if you have this information, you provide it to us over the phone or over our live chat feature or over email, and we will have the franchise tax recalculated to you. And most of the time it goes down to the minimum of $400. And then you pay the $50 annual report fee, which brings it to $450. So that takes you a little bit more in depth about the assumed par value capital method. I'm going to show you an example on the next slide. I'm not going to go into it in full detail because there's a lot of information here, but as I said, we are recording this, and you will get a copy of this slide. So this example is below is for a corporation that has 1 million shares of stock with a par value of $1 and 250 shares of stock with a par value of $5. Their gross assets is based on 1 million and issued shares totaling $400,000 or $485,000. And this is how it is properly calculated to get down to the assumed par value. You then take it and multiply it by the number of authorized shares, having a par value less than the assumed par. You then multiply the number of the authorized shares with the par value greater than the assumed par value capital, and then you figure your tax by dividing the assumed par value capital, round it up to the next million if it is over 1 million by 1 million, and then multiply by 400. And then the minimum tax for the assumed par value method of calculation is $400. If your calculation above comes out lower, you still have to pay $400 using this method. We do have a franchise tax calculator that can provide all of this information, and we'll be able to provide this information in detail for you to fully understand. So this is the franchise tax calculator that we have on our website, where you can play around with different par values, and you can put in an example number of authorized shares, enter the total number of issued shares, enter the total gross assets, and it basically will recalculate your franchise tax. So this example that you see here on your screen is based off of the one that I showed you earlier, and where it came out at $8,665, and with a total number of issued shares of 500,000 and a total gross assets of 100,000, it broke it down to using the assumed par value capital method to the lowest amount of $400. So just not to alarm you, that information can be recalculated. You just have to provide us the proper information for us to be able to do that for you. All right. So the next slide here is going to be talking about what happens if you forget to pay the franchise tax, because a lot of people do not understand that they have to pay a franchise tax here in the state of Delaware when they own a company. So we want to go into what happens if you forget to pay for it. So if the franchise tax for the corporation is not paid by March 1st, the state imposes a $200 late penalty. Once they impose that $200 late penalty, they then impose a monthly interest fee for every month that it's not paid of 1.5%. So it is very important that if you have a corporation, that you pay the franchise tax by the due date. And so for this example, with the minimum stock, by March 1, you're paying $175 plus a $50 annual report fee for $225. But if you pay it 1 day later, which is March 2nd, that $200 late penalty is going to be assessed along with the 1.5% interest. So you go from paying $225 to $380.63. And then if you wait 2 months, it goes from the $380.63 plus 1.5% to $386.33 plus the $50 annual report fee. So it is very important to make sure you pay on time to avoid any of these penalties. It is also good to note that the Delaware Franchise Tax, if you do not pay the franchise tax for 2 consecutive years, the company does go void here in the state of Delaware. So that's basically what happens if you forget to pay the franchise tax. So the next slide, we're going to talk about paying your franchise tax, because everybody wants to make sure that they pay their franchise tax by March 1. So to pay the 2018 franchise tax, you go on our website, delawareinc.com/payft, or you can go on our client portal, and you can pay it through there as well. And you can pay for multiple companies at one time, or you can pay for one single company. So along with the franchise tax, we do charge a minimal filing fee to use our services. The Harvard filing fee is $59 in addition to the Delaware franchise tax. So that's broken down as $175 for the Delaware franchise tax, $50 for the annual report, and $59 for our filing fee, brings it to a grand total of $284. So that's pretty self-explanatory of how that fee is broken down. It's whether you pay by check, whether you pay by phone, whether you pay online, it's the same amount. But we do have a hard deadline for March 1st, where we will stop taking payments over the phone, and then you will be directed to our website, and then at a certain point we will then shut our website down, and you will have to go directly to the state of Delaware to pay the franchise tax if you don't get to us before the deadline, because we need to make sure that we get everybody's payment up to the state on time. So we do have a blog coming out about the deadline times for March 1st. So keep that in mind, and be on the lookout for our blog tomorrow explaining the deadlines. So the next slide is, do I also have to pay franchise tax to other states? So many other states assess an annual franchise tax for companies doing business there. This includes companies formed in the state of Delaware, as well as with foreign qualification, also known as certificate of authority to do business in their home state. Paying your Delaware franchise tax does not exempt you from taxes owed to the other states. So if you are incorporated here in Delaware, but you are physically operating business in the state of California, you are subject to paying the annual franchise tax here in the state of Delaware, because you are physically, or your business is incorporated here in the state of Delaware, and you are also required to pay the annual franchise tax in the state of California, because you've been given the certificate of authority to do business there, and every state wants a piece of the pie. So the benefits, a lot of people then will ask, well, why would I then incorporate in Delaware? Well, the answer is you incorporate in Delaware to take advantage of the corporate law structure. We offer the strongest corporate law structure to protect the owners behind the company. So you can operate business all over the world with a Delaware company, and still be governed by the Delaware laws, but operating in another state's jurisdiction. So I know that's a lot of information, but that's basically how it's broken down in a nutshell. So the next slide is going to go into if you don't want your corporation. So you've come to the conclusion that the business is no longer going to do any more business, and you want to shut it down. There's a couple different options for that. There's two formal options, and there's one less formal option for letting your company go here in Delaware. The most formal way of closing your company is filing the certificate of dissolution. This is the the exact document that is used to close the company. You pay all the franchise tax up to date and the dissolution fee. It's filed with the state of Delaware. It's formally closed, done, and out the door. There is other options as well if you don't decide not to file the certificate of dissolution. You can request your registered agent to resign. There is a fee associated with us resigning as the registered agent. This will place the company into an inactive forfeited status with the state of Delaware. You will not be required to pay any franchise tax or past due franchise tax by letting the company go into the inactive forfeited status. But if you decide to come back later on down the road and you want to revive that company, you will have to pay any past due franchise taxes along with the revival fee. And the same goes for if you just, as we spoke about earlier, if you don't pay the franchise tax for 2 consecutive years and you let it go into a void status, if you decide that you want to revive that company, you do have to pay the past due franchise tax along with the revival fee to renew that corporation to get it back into good standing with the state of Delaware. So we do provide these options for you. We provide the fees for you. We provide the service for you. So it's all hands off for you so that you know all the information that you need to know in order to properly take the proper steps of either having us formally dissolve it or resigning as the registered agent on the company. And so with companies that are, if you do let your company go void, it will go void. If you haven't paid the franchise tax for 2017 and 2018, it will go void here on March 1st, 2019. All right, and then one of our last slides here is going to talk about the Certificate of Good Standing. A Certificate of Good Standing is a document that comes directly from the Secretary of State here in Delaware. You can see the example here. A lot of people, after they pay the franchise tax, might require this document. It's used for opening a business bank account, obtaining foreign qualification to do business in another state, buying or selling real estate in the company's name. So basically the only way you can get this document is if the company is up to date with all its Delaware franchise tax and registered agent fees. So if you have all of those things in order, we can provide you that document. We work through an electronic imaging system. We can get this document to you in as little as 2 business hours, and the cost of the document starts at $99. Depending on how fast you need it, there are different fees associated with it, but if you need it in 24 to 48 hours, we charge you $99 for it. So that's a little bit of information about the Delaware franchise tax and how it works. I do have a question here about what constitutes doing business in a state. So what constitutes doing business in a state is if you have a physical office location, you have employees hired in that state, or if you have a bank account in that state. So that's what constitutes doing business in a state.
Okay, and I'm just going to jump back in here, and we're going to take some questions. We have a few to get to, and we have plenty of time. So if anyone has questions about what you've seen here today or something related, feel free to start sending that in, and we'll answer as many as we can. I do just want to remind you that we're here to help you. We have a great team here in the office that is ready and able to take your questions. They can be reached by phone, by email. We have a live chat feature on our website that you can use during business hours, which are 9 to 5 Eastern time. And you can also reach us by Skype. So we're happy to answer your questions on any of those mediums, and we look forward to helping you with that. And lastly, Mike mentioned that we do have a blog post that's being published that if you're subscribed, you'll get that tomorrow on our schedule for Friday, March 1st, which is the deadline, to make sure that we get all the payments paid to the state on time. If you want to be included on that list for that message tomorrow, as well as all our future blog posts, I would encourage you to sign up for our blog. You can do that right on our website, delawareinc.com. You can see on the screen how to get to the subscription page. We do just send out news and editorial content. We don't spam you. It's one email per week, and we definitely will never share or sell your information to anyone else. You're not going to start getting mysterious emails from companies you've never heard of. So we hope you'll join us on our blog as well. And with that being said, we're going to jump into some questions here. We've gotten a few more that just came in as well. Let's start with, well, Mike, let me start with one that we had earlier. Does being late on franchise tax affect my credit score?
No, it does not affect your credit score because it's not associated. Your name is not associated with the state of Delaware, so it does not affect your credit score.
Okay. So one question that we received asked, what if you never filed shares for your corporation?
It depends on what they mean by this question. So I'm assuming that they probably they probably have an LLC. An LLC does not have shares of stock involved in the company. For an LLC, the company is not based off of shares of stock because it's not involved. It's just a fixed flat rate of $300. So if you, the other thing may be that they might be a nonprofit organization, and the nonprofit organization does not have shares of stock involved in it either, and they pay $25 a year.
Great. Okay. Another one of our participants is asking, I have a small closed corporation that's been up and running for about 6 months. Can we pay all fees without filing the annual report by March 1st? So can a company pay the amount that is due without actually filing the report?
No, you have to file the report along with paying the franchise tax all at one time. So when you go on our website or you give us the payment over the phone, we are asking for that information and in order for us to file the franchise tax, we have to take the information for the annual report at the same time. So the answer, unfortunately, is you can't just pay it without doing the annual report, because if you don't submit the report, then we can't file a franchise tax.
Okay. Next question, and I hope I'm interpreting this one right. I believe the person's asking if you have to file a report from a previous year in arrears, do you still have to pay the $50 fee? So I believe that's asking if there's a late, if they're late on the previous year, do they?
Yeah, no matter whether you're behind in franchise tax or it's the current year of franchise tax that you're paying, the annual report for a corporation is always part of it, and it is the $50 is included in that fee.
Okay, and if that doesn't answer the question, you can feel free to ask it a different way, and I'll do my best to get a better answer for you. The next question is, can you choose one method and change it to another for franchise tax calculation and then change it back again? So I guess year to year, do you have to use the same method?
So if you are a maximum stock company, most likely every year to file your franchise taxes, you're going to use the assumed par value capital method. So if you have 5,001 or more authorized shares. Your franchise tax is always going to be calculated by the authorized shares method, but you will always use the assumed par value capital method to recalculate that franchise tax. Whereas if you are a minimum stock company, your franchise tax is always calculated by the authorized shares method. So you can't use the two different methods every single year. You have to file the franchise tax correctly here in the state of Delaware. So most of the time you're either going to use the authorized shares method, but that's only if you have 5,000 or less authorized shares. Most likely if you have a corporation with over 5,001 authorized shares, you're going to use the assumed par value capital method.
Okay. I want to jump to a question that just came in a minute ago. Can you define the difference between authorized shares versus issued shares?
Yeah, so authorized shares is what you are is what is filed at the time of the filing the corporation. So when you file a company, you're required to tell us how many of the authorized shares you want. And then issuing those shares comes after the fact when you want to bring in investors or owners into the company, and you're issuing those shares of stock to show ownership in the company. So the authorized shares is how many shares of stock you have in the company, and the issued shares is when you are issuing them out. And you can break it down however you want. Let's say you have 1,500 shares, authorized shares, and you have 3 members of the company, and you're going to issue 500 to each owner in the company, so it's all split right down the middle, but you can do it different ways as well. So that's just an example, but that's the difference between authorized shares and issued shares.
Okay. We do have one question on LLC that just came in. I have a Delaware LLC. Do I have to file annual report while I pay franchise tax? So,
yeah. So, like I said, Delaware LLCs do not have to file the annual report. That's only required for corporations.
Okay. Someone said that their accountant told them that they wouldn't have to file taxes or reports until June 15th. But that doesn't seem correct for either Delaware or Texas, which is one of those, I suppose, is where they're foreign qualified.
Yeah, so each state is different as far as when the due dates are for when the franchise tax is due. Some states require their franchise tax fees to be paid quarterly, sometimes biannually, sometimes every 10 years, sometimes every year. So for the corporation, it's due every year here in Delaware on March 1st, but it may be different for the state of Texas when it's due. It might be due June 15th. I'm not 100% sure of that, but do always know that the state of Delaware's franchise tax is due March 1 of every year.
Okay. I'm gonna do my best to interpret this question. I think they're asking, can a P.O. box or a mail forwarding address be used as the registered agent even be used as a director or an officer in the address disclosed on a franchise tax filing?
No, you cannot use a P.O. box, and you cannot use Harvard Business Services address when filing the annual report. You are required to provide the physical office location of the business for the directors, officers, and the physical office location. If you do provide our address or P.O. box, we will contact you to reach out. We will contact you and ask you for the physical office location for the business. If we don't get that information, then we can't file the franchise tax report.
Okay. Now this is a good question. We have a Delaware C Corp and a bank account in New York. We only plan on selling our products on Amazon. We may ship out of California, but transactions are all online. Do we have to file foreign state fees for every state we ship to, or is it where Amazon is located, or does online sales have its own rules for state filings?
Okay, so there's a lot of different variables that go along with this. But if you are a Delaware C corporation, you have a bank account in New York, but you may ship out of California. So generally, you only have to file for foreign qualification in the state in which you're physically doing business in, whether that's you have a physical office location, you have employees there, or you have a bank account there. So there are companies that do have multiple office locations and bank accounts and do different things in different states. So if one of those three things generally applies, then often you are going to file for foreign qualification, not just in one, but in many states. But there's many different variables, and it would be best to speak to an attorney who can help provide, the real answer for that question. So, like I said, there's many different variables, but you'll want to speak with them about what is the best direction for you to go with that.
Okay, and Mike, we have an update from a previous question that I guess I didn't read correctly. Mm-hmm. So they're asking, when you file your annual report on March 1st, we said that you're paying the tax for the previous calendar year. Mm-hmm. Is the report itself also for the previous year, or are the officers supposed to be current as of that year? Mike's just taking a look at the question that came in on the chat.
So you are always going to provide the officer, for a lot of companies, it doesn't change year to year as far as who the officer and who the directors are. So no matter whether any of the directors or any of the officers change, you still have to provide that annual report every single year. And if there is a change for it, you would just file it the next year that the franchise tax is due. So the annual reports might be the same year to year. It might be just you and you're the only person in the company, but you still have to file that annual report every year with the state of Delaware. So it just really depends on, if you're bringing in new people or it's just you, but, most of the time it may not change year to year. So, but you do have to file it every year. And if you add someone to your company, you do have to provide that on the next annual report.
Okay, and a follow-up from that same person, can the officers and the directors on the annual report be one person or be the same person in both?
Yes. One person can hold all company positions and be the sole owner of a company. Most of the time, if you're just one person, you're every single person in the company. You're the shareholder, director, and officer, so you would provide that information as such, and that is no problem. It is one person can be the sole owner and hold all company positions.
Great. And I just want to let everybody know these questions are awesome that are coming in. Keep them coming. We're going to keep rolling and see how many we can get to. This one also is a follow-up from a previous question. Do closed corporations in Delaware require an annual report? That's where the person was confused, I guess.
Every single type of corporation, whether you're a general corporation, closed corporation, or a non-stock, non-profit corporation, has to file an annual report with the state of Delaware. The only company that does not have to file an annual report is the limited liability company.
Okay. Do we have a template to share for the annual report, and can the annual report be emailed directly to Harvard?
So yes. So the annual when we send out the official franchise tax notice to you, we provide the annual report right there on the letter that we are sending to you, and when you go and do it on our website, the information that you're filling in is the actual report. It's very simple and straightforward. I don't have a sample here, but they just want you to fill in the physical address. They want you to fill in the names and all the addresses of all the directors, and then fill in the officer, at least one officer, and then you need to sign it at the bottom. It's a simple one-page report.
Okay. Here's an easy one. What's the due date for LLC Franchise Tax?
And also going back to William's question, the annual report can be emailed directly to us.
So this question is, what's the due date for the LLC Franchise Tax?
June 1st.
All right. Nice and simple there. So I believe this is a follow-up to an earlier question. If you're selling online in multiple states, then in every state where you ship a product, you have to file as a foreign state. And I think you were trying to answer that earlier, that there's some different variables there.
Yeah, so there's multiple different variables with this. You can operate lawful business activities all over the world with a Delaware company. You're generally going to file for certificate of authority in the state in which you're physically doing business in, where you have an office located, where you've hired employees, or where you have a bank account. So generally, you don't have to file certificate of authority in every state to do business. It's generally you're only filing for certificate of authority to do business in the state in which you're physically located.
Okay. If there's no physical product, such as an intellectual property type product, and the office location is a home office, does one need to register in that state?
So we do have a lot of clients who ask this question, and the answer to this question is generally you are still required to file as a first certificate of authority because your home is your physical office location. So generally, if you are working out of your home or you have a bank account located in that state, then you generally have a physical office location, and that can be your home. So generally, you are going to file a certificate of authority in the state in which you're physically doing business in, even if you're working out of your home, because it will help you to comply with any local and state compliance matters.
Great. We're coming down to the end here, so if there are more questions, please go ahead and send them in. Mike, if a company didn't conduct any business and has no revenue, does it still have to pay the franchise tax for a given year?
Yeah, that's a good question. So no matter whether you do any business or not with a Delaware company, you are still required to pay the franchise tax here in the state of Delaware. It's required to keep the company in good standing here in the state of Delaware.
Okay. To the person who just asked, we are sending out these slides. So the slides and the recording for today's session are going to be sent in an email tomorrow. So you should be seeing that during the day tomorrow. And if not, please let us know. Is there any way to have a Delaware franchise tax waived or get an extension on the payment?
That's also a very good question. If you do receive a late fee and you want it waived or you want an extension, we can't physically provide that to you. You will have to call the state of Delaware directly to see if they can help waive the late fee. We don't have any right to do that as we're not part of the state of Delaware, and we don't have any way the right to waive any late fees that have been associated with the company. So if you do have questions about having late fee or interest or anything of that waived, you would have to call the state of directly. Okay. State of Delaware directly.
Great. Is franchise tax prorated for a company's first year if it wasn't in business for the full year?
No, it is not prorated. It's a fixed flat fee. So if you form your company on December 31st, 2019, you still have to pay that full amount by the March 1 deadline or the June 1st deadline. So there's no prorated rate for Delaware franchise tax.
Okay, and I believe this is going to be our final question. If you have a bank account in Delaware and a home office elsewhere, would you still need to file a certificate of authority in your home office state?
So there's a lot of different variables with this. I wish I could answer it in full detail for you, but I'm not an attorney. You still may be required to file for certificate of authority in your home state because your office is physically located there. But there's a lot of different variables there, so I would suggest you speaking to an attorney.
Okay, well, I think that will do it for us today. Just as a reminder, the deadline for corporations in Delaware is this Friday. As Mike said, we have kind of a special schedule on that day to make sure that we get everybody's payment done. So we would encourage you not to wait until the very last minute, but you are able to pay through the first on Friday. So get in touch if we can help you with that in any way, and feel free to use the calculator on our website. We are going to be sending out the recording and the slides in an email tomorrow. And if there's anything that we were unable to answer for you, please just send us an email. You can send it to payments@delawareinc.com if it's about franchise tax. You can send it to info@delawareinc.com if it's about anything else. So thank you very much for taking some time out of your day for us today. And hopefully we were able to answer all your questions. Enjoy the rest of your day.